Evening, everyone. Jeremy here, quantstrategic.com.sg, and this is an addition video to the Straits Times Index review. And I'm going to be talking about a couple of heavyweights on the STI by weightage, starting with the most heavy weighted stock on the STI, which is DBS Bank. Closed at $25.28, and all the charts that I'll be using will be on the monthly basis, on a long-term basis. So DBS Bank short signal during the pandemic hit a low at about $16.50, and eventually recovered and had a nice V-shaped recovery all the way to the pivot of 26.74, where it may resume its uptrend to its all-time high of $31.27. However, for the month of February, you can notice that the close was just holding above the SSSA line on the cloud, and is yet to be seen whether DBS Bank is able to break out above 26.74 to capture its all-time high at 31.27. Moving on to OCBC Bank, pretty much the same picture, same story. However, the signal was issued a little bit earlier in 2019 December, and the stock plummeted to its lows at about $7.70 during the pandemic, and did a recovery to the pivot of 10.98, didn't touch the pivot, and now has retreated to about $10.30. So the all-time high was at about $14, and if we are able to break this particular pivot at 10.98, then we may have a new uptrend forming on the OCBC. Now moving on to the third bank, which is the third heaviest weightage on the STI. For UOB Bank, very similar to DBS Bank. It was trading on an uptrend for about 2 years, and then a short signal at 22.71 on the 2nd of March during the pandemic, touched a low at about $17.20, and eventually staged a recovery. Though not as strong as DBS Bank, it must break this particular pivot somewhere around 25.69 for it to break out and touch its all-time highs at about $30. All right, so you can see for DBS, OCBC, and UOB, the top three components by weightage on the STI, it is pinnacle. It's important for the three banks to break out of their pivots, for the STI to make headways and break the downtrend. The fourth heavyweight by weightage on the Straits Times Index is SINGTEL. Now, the picture for SINGTEL looks very different from the banks in terms of its bearishness. The SINGTEL stock has been on a short journey, bearish journey since 2015 September, and the short signals issued around $3.65. It has been on a strong downtrend below the super trend line, as well as below the SSSB line on the cloud, and currently it is closed at 233, hit a low of at about $2, all right, and it's currently closed at $2.33. So for SINGTEL to recover, it needs to break this pivot at $2.93 and form and trade above this particular SSSB line for it to resume its uptrend. So SINGTEL, being the fourth highest weightage on the Straits Times Index, is causing a little bit of drag. Now, on a brighter side and brighter note, the SGX, all right, which is S68 on your Straits Times Index, has quite a nice breakout since September of 2019. And there was a nice long signal at $8.38. So if you zoom back to SGX, all right, since 2001, it rallied all the way to about $17.15, all right, and essentially during Lehman, it dropped to a low of about $4, and currently it was actually range trading for almost 8 years before the breakout. So this is something to watch for, because the price target, if it does break out and continue its uptrend, what you can expect is it to test the all-time highs, maybe over the next couple of years. However, nice long signal, and it's bullish, and you can see why it's bullish because it's above the SSSA line on the cloud, higher highs for the past year. All right, and currently closed at $9.82. Now, moving on to the property counter, I want to highlight one of the heavyweights on the STI, which is CAPITALAND. And CAPITALAND charts look a little bit like the SGX charts with an all-time high of $7.27. Same story, it actually touched a low of $1.50 during the Lehman crisis, and thereafter was on a range trade for almost the past 10 years. And if you zoom in on the latest action during the pandemic, you can see CAPITALAND did drop and touch a low again of about $2.50. It staged a nice recovery, trying to break the pivot at 363 for it to resume its uptrend, but failed. Okay, and we closed at about 350 and currently is trading about 315. All right, so yet to be seen how CAPITALAND is going to pan out for the next couple of months. But as of now, it is still trading below the SSSB line of the cloud, and it's hence still very bearish. Now, a bullish stock that has attracted a lot of investor attention, a little bit more than SGX, is WILMAR. All right, so for WILMAR, we touch an all-time high of $7.27. All right, in 2010. All right, and it dipped to 250 and of course $2.60 during the pandemic low. It is currently closed at 531, but if you zoom in on the price action, we had a very nice breakout in 2019 with a long signal in 2016. All right, so WILMAR is pretty bullish in terms of its chart in the long term as well as the shorter term time frame. So if you look at all four time frames, you can see WILMAR stock uptrend on the 1 month chart, the long term charts, uptrend on the weekly charts, very nice long signal at on the 15th of June last year, and on the daily chart and on the 4-hourly charts, very impressive climb, especially at the year-end rally, where WILMAR gained almost $1, which is about 25% profit. On the shorter term, however, WILMAR is taking a break right here, and let's see whether WILMAR is able to hold this particular support here at about 520 and then rebound and give a little bit of strength to the Singapore market. And finally, the last heavyweight that I'm going to be discussing that's playing a little bit of influence on the Straits Times Index is KEPPEL CORP. All right, it is ranked the 10th heavyweight on the Straits Times Index by weightage. And as you can see, KEPPEL CORP, in terms of a long-term view, since Lehman, all right, which touched about $3, it has actually recovered to 12. All-time high was 14. But thereafter, there was a short signal right here, which led it to touch a low of about $5. Okay, and if you zoom in on the current time frame, there was a short signal since 2018 again at 598, and it touched a low last year close to $4, rebounded but closed at 498. Now the point is that KEPPEL CORP is in a bearish energy with a dip at all since 2016, and is still on a downtrend. We have to break $6.27 in order to break out from this downtrend, and probably a 650 level would warrant a buy and a long on KEPPEL CORP. So on closing, all the information on as to whether the STI component stocks are in the downtrend or uptrend can be found on the STI metrics on my webpage, quantstrategic.com.sg, and you'll be able to see short-term, medium-term, and long-term on the table which I've attached to the website. And under long-term, you'll notice that DBS Bank, for example, is on a hold. OCBC Bank is on a sell. UOB Bank is on a sell. SINGTEL is on a sell. SGX is on a buy on a long-term basis. So use that as a reference to tell you which particular stock is on a downtrend or a uptrend for you to have an idea how the Straits Times Index is going to move as these stocks trade. All right, so hopefully it's informative for you, and thanks for watching, and I'll catch you again in my next video.